Hey, what's going on YouTube? It's Sam with the Humble Outliers. Today we're going to be talking about 5 reasons why you should invest with M1 Finance. Now, as we all know, in today's age, there's a lot of different investing tools out there. There's Robinhood, Webull, TD Ameritrade, but I wanted to paint the case today of why you should invest with M1 Finance. So, quick intro, guys. My channel here is to help you guys with career advice, personal finance, and investing. But before we begin, could you please smash that like button? I would love to hit 100 subscribers before the end of the month. It would mean a lot to me. And let's begin. So the first reason I would say to invest with M1 Finance is no fees. So the nice thing about it is with these fractional shares that you'd be purchasing, there are no fees associated with that. And that includes selling shares and also buying shares. So that's the first reason why that it's nice, because as you're doing automated investing, as I'll show you pretty soon, there are ways that you can auto invest and not have to deal with any fees, and just gives you that flexibility. Moving on to number 4. The fourth reason is it has a great mobile platform, and it's very easily appealing and also really user friendly. As you can see here, from the website portfolio, I have one set up as growth portfolio. So I've got $400 in here right now. Been about 1 month in now. Started in December 19. So you can see here that there's slices here. So this is how I've decided to allocate my account. So the bulk of my share has gone towards tech and cloud. So we can go into here. Second is financials, 25%. The third is REITs. And the fourth is consumer spending. So if you go in here, you can see that tech and cloud. I've got Amazon, Google, Alibaba, Microsoft, a lot of big name stocks that traditionally would be very hard to invest in if you had unless you had a lot of capital sitting around. And that's one of the reasons why I wanted to invest with M1, was because I'd love to be able to invest more in Amazon and Google, but as Amazon's over $1,800 a share, Google's like $1,300 a share as of this video. So being able to still get into that tech bubble and being able to invest in those big companies that you really enjoy is also something that can give you some great flexibility. You can see here there's some dividend stocks in here as well. So my strategy with this portfolio is to have it divvied up into some growth stocks and also some dividend stocks. And as these growth stocks appreciate, I'll definitely look at allocating and shifting the percentages, which you can easily do, to more favor towards the dividend stocks. But I definitely want to build more on the growth stocks, because there are some stocks I feel that can really still have room to run up, and especially if you're doing this passively investing. So the next portfolio here I'll show you the slice is financials. So I put PayPal and Square. Obviously those are stocks that don't pay dividends, but there are growth stocks that I think that still have a lot of room to grow. So I put these at a little bit heavier allocation. You can see here that there's the traditional Visas, JP Morgan, some other stocks like BlackRock, which is pretty expensive, $400 to $500 per share, which is a good asset management company that I want to get a part of. And you can see there's some other accounts here that have dividends. So as these accounts appreciate, I can always divvy it up and spread the allocation to where I feel. There's definitely room for me to shave some of these stocks as portfolios, because one of the things that you don't want to do is over diversify. As you can see, once you've over diversified, there's not a whole lot that can go, especially if there's a certain stock that runs up. So these are my REITs. A lot of them are well-known names. I'll definitely trim this down as well, but there's a lot of good names that can build some residual dividends that can pay you out, and also there's probably some room for a run up there. For consumer spending, I've got some notable brands: 3M, AbbVie. These names are some names that I feel like are really good dividend stocks. Also consumer brands that have traditional spending habits, or maybe some type of consumer products, pharmaceutical products. So they're products that will have consumer spend and also room that I can watch and trim. It's definitely some too many stocks there, but I'll do that over time. So let's move on to the third reason why. And the third reason why is that it's perfect for building a growth dividend portfolio. So you can see here that those stocks that we were looking at, some are very expensive, but they also have room for run up. So with this, you can really tailor your portfolio to how you want to set it up as, whether you want to do it as pure dividend growth or if you want to have some room for appreciation through some equity stocks. I feel that I'd rather have some stocks that I feel have room to grow a little bit more than dividends. So I'd love to put more shares into those, more percentages in that. And then as those stocks become maybe what I'm watching, they become a little bit overpriced, I can always dial that back, that percentage, and then shift that percentage to somewhere else, maybe to more of a dividend stock. But that just gives you some room for flexibility. It doesn't automatically sell a share once you've dialed that percentage back. It just really allocates the percentages once you've do your money here that's set up for investing, whether you do that through a one-time deposit or you want to do an auto invest. Currently I have it at $150 a month that's going in here, or $150 every week. So that's just going to give me some automated investing. I can always, like I said, if I want to invest more, once I get more experience in M1, being able to shift where I want to go and how much and what percentage. So the second reason is the automatic investing, like as we were talking about. This will really free up your time. So if you go here, you can see that I've got some money set up here for reoccurring. You can set up reoccurring schedule. You can set up your frequency here. You can type in the amount here. So you can do weekly, bi-weekly, monthly, week of the month. And then if you click this auto invest button here, you can see that you can control how much of your balance and all the deposits and dividends will add to your cash balance. So you can see here, auto invest all of my cash. You can set it at a limit of 10. You could also do just don't auto invest. So let's say you had dividends in here, or you were waiting to time it in a specific timing, or let's say you just wanted to accumulate cash and not have it invest. So you could do that just by clicking this. Just make sure you do that. And the other option here is to auto invest with a cash limit overset. So let's say you wanted to set it at, you didn't want this money to be invested unless the balance goes over, let's say $100. So if this cash balance goes over $100, anything above that will be invested at an increment of $10. So that gives you some flexibility if you want to just have some cash sitting there on the side and not in the market. And the number one reason is the fractional shares. I really like the fractional shares side of things. Coming from a TD Ameritrade account where you have to buy everything, at the stock price, here you can really have some extra exposure that maybe you wouldn't have just because of the capital that requires. So if you were to buy, tons of shares of Amazon, Google, Alibaba, even Tesla is over $400 a share. That's a lot of capital. So it's nice that you can still try to get some exposure. You can definitely tailor it to how you want to be, narrow it down a little bit more so it's not so broad, and that's my plan over time. But I feel that once you've been able to kind of get some experience and you can able to look through here, go through your slices, you can create as many slices as you like. There is a limit of 100 stocks that you can pick from. So hopefully you don't go more than that, but need more than that. But there's that option that you can go 100 stocks or less, and you can really build your own kind of even ETF, really, if you think about it. So yeah, that's everything that I think the top 5 reasons of why you should invest with M1 Finance. So in conclusion, guys, what do you guys think about M1 Finance? Do you think it's a good way to invest? If you do, please plan on signing up and use the link below. We both get $10. Again, it's an affiliate link, so we both get $10 to invest, but it's free money. And that'll wrap up the video. So thanks again for listening. And as the saying goes, guys, hindsight is always 20/20. So let's get out there and get it, outliers.